We were pretty, I don't want to say traumatized, that's not quite the right word, but we called our piece this morning drinking from a fire hose. And we got a lot of earnings last week. And, we're in the middle of the busiest stretch. Last week was the first part of that. And not only did we hear from a ton of companies across a bunch of different industries and sectors, we got a ton of detail on tariffs, and none of it was the same from company to company. So, to be honest, I let my brain rest a little bit
Right.
over the weekend after kind of processing all that on Friday and Friday night.
You are expert at the partition between the seven stocks Paul and I follow. Big earnings week for those
Oh
seven
boy.
stocks.
Yep.
And Lori, the small cap, mid cap area. How does this tariff war affect mid cap and small cap publicly traded investments?
It's a great question, Tom. I mean, there's sort of conflicting impulses. I would say the negative headwind that I think affects the small cap space and the mid cap space more so than the big cap space is just bargaining power, right? And the ability to manage through. And it doesn't matter if you're talking about tariffs or something else. Anytime you've got a big problem or a big curveball in the equity market, odds are the big cap companies are going to be able to navigate it better than the smaller cap companies. Now, somewhat of an offset to that is the idea that the smaller cap companies are a bit more domestic. And so if you go back to 2018 during the first China trade war, we actually saw some small cap outperformance in the first half of the year when people wanted to buy domestic. We haven't really seen that this time around, but it doesn't mean that you couldn't see that come back at some point. I would say those small caps are already, they've already sort of hit recession lows on valuations. So arguably they've been de-risked a bit more than the big caps.
We're kind of getting into the teeth of earnings this week. Lori, what have you seen? What has kind of surprised you? What's been your take so far?
So look, Paul, I've been sort of well known for griping these last few months that companies weren't talking
No,
about tariffs, and I've been kind of cranky about it. I'm not going to lie.
no.
Um, And because I just felt like companies were not giving the analyst community on either the sell side or the buy side enough information to do their jobs. We're not spies. We don't break into corporate headquarters and find out, all this secret information. To a certain extent, you are relying on companies for giving you certain parameters on certain things, and they just weren't doing that. They have finally started to discuss tariff specifics.
Right.
And so my takeaway is the conversation is where it needs to be. I do think, I was sort of heartened that I think it was an intellectually honest conversation we got last week from companies saying, look, we're not changing our guidance because we think we can manage this to we're not going to do annual guidance anymore. We're going to do quarterly guidance instead to we can't give you anything right now. We'll give you an answer when we have one, and we're not going to give you one until we're comfortable. And I think those are all valid responses as long as that's really what the company feels comfortable and able to provide. As long as they're being transparent, I'm kind of okay with whatever they say right now.
We have seen the S&P 500 bounce really over the last couple of 3 weeks here, up 10% off the bottom. What does that tell you?
So look, if you go back to April 8th, which I believe was the low, we were at 18.9% from the high, and that was right at the bottom of what we call a tier 2 growth scare, which is where the market prices in either a recession or a big crisis or fear of one. We don't actually get it, but we sort of price in the early stages of panic around one, sort of similar to 2018, 2010, 2011, and 2015, 16. So that's where we were, and we've retraced a good chunk of that at this point. I think it's telling us that the market is, number one, not convinced that we're necessarily going to have a recession. If you have recession pricing, that takes you down to a tier 3 growth scare, 42, 4,500 on the S&P. We did not do that. And I think that's actually, quite a rational move from the market at this point in time. I also think the market's pricing in the idea that we did see Washington blink, that we did see a pivot on trade, and it's kind of two steps forward, one step back. It's kind of halting, frustrating progress, but I do think the street is
Right.
treating it as progress nonetheless.